Okay, so let's talk about the 60 to 70% win rate. Is it good or is it bad? So you'll hear a lot of traders talking about their strategies and how they have a 60% win rate or 70% win rate and how amazing it is to have a 60% win rate. I've heard traders talking about how they have a 50, like a 55% win rate and how it's awesome and all that stuff. So when you're thinking about building your own strategy or you're thinking about buying somebody else's strategy, ask them what their win rate is, like what their true win rate is, and how they get it. So, like, do they get their win rate because there's 40 stocks to trade today, and if you traded all of them, you would have had a 70% win rate? How do you do that if you don't have a huge account and like three people helping you trade if they're all happening close to the same time? Or is it one or two stocks that they're trading and they have a 60 or 70% win rate, or maybe it's just one stock? So definitely want to know is what's the win rate and how do they get that number? How many stocks a day do you have to trade in order to have that number? Because someone will be like, oh, you could just trade a couple. We give you like 30. Yeah, but how do you get the number? Is it based on the 30? Or do you just pick one or two of the best ones? Like, how do you get that number? So you need to know that if you're going to be buying somebody else's strategy. My strategy, I get that number off of each individual stock. And I try not to trade more than I can afford to trade at a time. So for me, I usually carry like 6 stocks is all I carry, and that's it, And then I can buy all 6 of them if they happen at the exact same time. My risk management budgets them all out. They have their own little bucket of money and all that stuff. So which I teach my traders exactly how to do all of that. So now let's get into it. So 60% win rate, which is a pretty popular win rate that you'll hear a lot of traders talking about, especially in swing trading. Okay. So here we have our 60% winner right here. 4 losses and 6 wins. So what exactly does that really mean to you as a trader? It's not what it looks like and what you might think. So yes, this looks good. Someone says, yeah, my strategy is 60% win rate. Look at what it is. You have these 4 losses, but look at these 6 winners you have over here. So let's break that down a little bit farther. So if you have a 60% win rate, that means you got your 4 losses and somebody has to pay for those losses. So if you have 4, and this is assuming that your strategy is a one-to-one strategy and that everything that you risk on one stock, you can make on another. So it's assuming, let's say you're risking $100 on every trade. So on this loser, you lost $100. On this winner, you made $100. A lot of traders, they just buy whatever their account will allow them to buy. So on this loser, they could have lost $200, and on this winner, they might have only won $100. So if you have a 60% win rate and you're not making at least what you're losing, you're in trouble. So this also assumes that you're day trading or even swing trading, but I'm mostly focusing this towards day traders. But swing trading, this also applies. So this also assumes that you're doing a 1-to-1 or better. A 2-to-1 strategy in day trading is really, really difficult. I'm not sure how traders can have a good success rate on a 2-to-1 unless it's like a 60% success rate. I just don't see it. So, maybe there's things out there, but, it's possible, I guess, on a trade, here and there. I mean, I get 2-to-1, 3-to-1, and 5-to-1 winners all the time. But to base a full strategy and say no matter what, you don't sell unless you have a 2-to-1 or 3-to-1, I find that to be a really difficult thing. So, if you're looking to build a strategy like that, I hope you find it. If you're looking to buy a strategy like that, really double check and see what that means. Make sure they're not cherry picking and all that stuff. And what I mean is when you say 2-to-1 strategy, it means no matter what, you don't sell unless you get a 2-to-1 out of it. Now, a lot of strategies will give you 2-to-1. I know mine does. Give you 3-to-1, 4-to-1, 5-to-1, 8-to-1. So I've had all of those, and a lot of strategies will give you those. But just as an all or nothing, it's kind of difficult. But anyway, so here we go. So you have your 4 losers. You need 4 winners to pay for those losers. If you're doing at least a 1-to-1 strategy and your winning and losing is equal. So then you have, what do you have left? You have 2 winners. So out of 10 trades, you have 2 winners that are left. What does that actually mean? So this one winner has to partially pay for these trades over here because if you're in a small trading account where you have commissions and things like that or any kind of ECN fees or anything like that, this winner's paying for part of that. if you made any mistakes in your order entry, you're a penny off here and there, a little bit of slippage, all that stuff, this winner is going to pay for that. So then what does that mean? All right, so let's say you're risking $100 to make $100 on all of your trades, and if this loser lost 100, this winner was going to make 100, right? So then at the end of the day, if this one had to pay for a bunch of that, especially if you like your commissions are $8 because you're like with an offshore broker, easily plus a couple little tiny bitty mistakes, $20 what you're left with. So now you made $120 out of all this. So in trading, what you can make, you can lose or more, right? So also, you never know if you're going to have a bad losing streak. So if you're going to take 10 trades, you have to be willing to risk a loss on every single one of those. And your strategy has to let you know, like, how many trades could I possibly lose in a week? Like, what could a really bad week or a month look like, or a year, or whatever it is, however your frequency is. So if you can lose all 10 of these trades, you're essentially risking $1,000 to make these 10 trades, and risking $1,000 to make $120. Does that make sense to you? Hey, I got this great idea. Why don't you do this thing? We're going to risk $1,000 of your money, and at the end, if you're right, you're going to make $120. Does that even sound great? So if you do an aggregate, of 100 trades or whatever, at the end of the day, every 10 trades, you're only making $120. So you're risking like $10,000 to make, 1,200. So, man, that does not sound good to me. Now, at the end, you're still making money, right? So you're still a winner in the market. You're still making money. But, why would you choose a 60% strategy? Or why would you build a strategy that's only 60% winner if you can have a 70% winner? So we'll look at what a 70% winner actually means here in a second. But I guess one of the reasons why would be frequency. So a 60% winning strategy, maybe it provides you with 200 trades a year, and a 70% winning strategy, maybe it only provides you with 50 trades a year. So in the end, maybe you're making more money with a 60% winner because you're taking more trades. And you're just going through the roller coaster of this risk versus reward. But at the end, maybe you're making a little bit more money. But if you can do the exact same thing and have a 70% winning strategy, why wouldn't you do that? Let's look at a 70% winning strategy. So you have 3 losers, right? 7 winners, 70% strategy. So let's break that down. So you take these 3 winners and you use them to pay for your 3 losers. Now you're left with 4 winners. That's a huge difference from the 60% strategy, right? So once you've got your 4 winners, this one's going to pay a little bit of money to cover your commissions and any kind of mistakes. You're left with 3 winners, 10% more. What a difference. Just a 10% more win rate. One more stock that you're winning per week. What a difference. End of that, when you break it down, you're really only left with 1 solid green box. Whereas on a 70% winner, you're left with 3 solid green boxes. So what a huge difference having 1 more winner out of every 10 trades makes, right? So why not go for a strategy that gives you at least 70% win rate, at least 70%? Why waste your time with a 60% strategy unless the frequency of the trades were so much higher that at the end it made a really big financial difference? But, higher frequency, higher commissions, a lot more work, a lot more stress, a lot more hassle, all that stuff. So, man, really look at that. So here you go. So you have your 3 losers, your 3 winners. They paid for the losers. This one paid for commissions and garbage, and you're left with 3. So now you risked $1,000 to make $320. So that sounds way better than risking $1,000 to make $120. So, all right. So now, why would you do a 70% when you can do an 80% strategy? There are 80% strategies out there. So if you're going to create your own strategy, you can create an 80% strategy. I know for sure you can create one because my strategy is at least 80%. Some of my stocks, I get 90%. One of my stocks, I've had 100% win rate on it in a little over a year. So another one of my stocks, As long as I trade it, half at the last half of the day, 100% win rate as well. So if I trade it, all day long, it's a 90% win rate. So you can definitely do 80 to 90% win rates for sure if you really work hard at building a strategy around that. That's your goal. At the same time, if someone's selling you a strategy at 60% or 70%, ask yourself, should I be looking for 80%? So let's break 80% down. You got your 2 losers, your 2 winners, paid for your losers. You have 6 winners left. Huge difference. So instead of 4 losses in a week, now you have 2 losses, and or 4 losses in 10 trades, you have 2 losses, right? So one more winner than the 70%, and what a big difference. So once you had those pay for, this one has to kind of cover the commissions and all that again. You're left with 5 winners to take home the money. So now you've risked $1,000 technically, and you are taking home 520 versus 120. So even if you have a higher frequency win rate, break it down, man. Like really look at it and say, maybe I have a higher frequency on the 60% win rate, but am I making more money? How much higher does it actually have to be in order for it to, to not have an 80% win strategy? Like that's a huge, like for every one win that you have on a 1 win out of 10, we'll say, on a 60% strategy, I get 5. So you have to have 5 times more winners than I do. And hopefully commissions, are nothing, because you're paying a lot more in commissions than I'm paying because I'm not taking that many trades. All right, so now 90% win rate, which I do have in my strategy. So you have your loser, you have your winner, right? So now you have this one winner pays for that loser, and now you're taking home 8 of these. And out of those 8, one's going to pay for the commissions and the junk. What a huge difference. Huge difference. But when you go back, even just going back to the 70% win rate versus the 60% win rate, I mean, that's what you want to take home after your hard work this week. And what if you make a mistake, like a full-on mistake like I make all the time? You see it on my YouTube channel all the time. This whole thing is wiped out. Like you need like 3 more weeks now, or 30 more trades just to make up for your mistake. If you make one mistake, like this assumes perfect, everything is perfect, and this is what you get left with. So anyway, so really think about it when you're looking at your win rate, versus your frequency of trade, commissions that you're going to pay. All that needs to really factor in to your trading strategy. So when you look at your trade plan and your risk management plan and your trading strategy, make sure you're factoring in these things. So when I was building my strategy, or going to build a strategy, I've been trading for a very long time, like over 20 years. So, and I used to trade with a 60% and 70% win rate. I never broke it down like this to see what that really meant. And then I decided, I'm going to build this new strategy based on day trading, something so simple I can teach, I feel like I could teach anybody to do. I could teach my friends, my family, everybody who thinks trading is difficult and hard and chart reading and all this stuff and candlestick patterns and all this stuff you have to remember and how do you find them. And I was like, you know what? I don't want to have to teach them all that. That's like crazy. It's a lot of work. I know how it was. I want something simple. They can just look at it and be like, computer tell them to buy, computer tell them to sell. Like I want it to be that easy. So, but I also didn't want to get stuck trading in the morning at the 9:30 to 10:30 range. What if I want to do something in the morning? I can't make my money that day. So I want to be able to trade anytime during the day. So I want to have opportunities all day long, I should say. So I decided to build a new strategy, a whole new trading system based on an algorithm where a computer would tell me when to get in and when to get out. Then I had to start putting down all the rules around that. What's the win rate have to be? What is the trade frequency? What time of the day do I want to be able to trade? Do I want to have the option where I can build my portfolio based on my schedule? I want to trade in the afternoon. I'll build an afternoon portfolio. I want to trade in the morning. I'll build a morning portfolio. Let the algorithm tell me. So I put all these things together, and that's what really made me look at the win rate. I was like, oh my goodness, I've been trading with a 60 and 70% win rate for all these years. Why did I do that to myself? So, and that's what really made me open my eyes. And I said, I'm not accepting anything less than 80%. And I really want 90% on most of my stuff, but I'll accept an 80%. And occasionally my stocks will fall off a little bit, and I'll be looking at like a 75 to 80%, somewhere in there to bounce around. And then they'll get back up into the 80s. If they don't, I cut them loose and I get something. I replace it with an 80%er. I'm not going to stick around with a 70% winner when I can have an 80 or 90% winner in my portfolio. That's just crazy. You see the difference. The difference at the end of the year is huge from a financial standpoint. So anyway, I hope this helps you think about your trade plan, your risk management, and if you're going to be building your own strategy or you're looking to buy a strategy, again, just ask, what is the win rate? How do they get that number? How many stocks do you have to trade in a day? Like, are they giving you a list of 30 stocks that you have to trade, all of them, in order for that number to actually work? Do you have to trade, what does that look like? Because if not, you're just getting lucky. Like if you have to trade all these stocks today and it's a 90% win rate, but you got to trade all these stocks and you can only afford to trade one, what if you just bought this one and you're a loser today when you should have been a winner? And then tomorrow you do the same thing. And you know what I mean? Like, it doesn't make sense if you have to buy all of these. So if you have any questions or comments on this, please let me know. I always want to hear what other traders are thinking and doing. So yeah, feel free to reach out, shoot me an email, hit me up on YouTube, however you want to do it.